today.
I don't know where Jeremy is.
Yeah,
Here we are.
Pottering about. Yeah.
I don't know if Jeremy knows where Jeremy is. This is great. I'm glad Brock, you're taking the admin driver's seat for Real Friday. So thank you for doing that.
Yeah. I'm at the home office today.
So I'm obviously, for those just joining in or those who watch this later, I'm Rick Roque. Of course, Jeremy. I'm Rick Roque and Brock Cassidy and Jeremy Potter, Mr. Detroit, Mr. Steel Belt, Rust Belt.
Next belt. Stop it with the
belt.
Rust Belt.
Yeah,
it'll never be the Rust Belt ever again. It's the next belt from here on out. I'll change my name if you need me to remember it. But
no, that's perfect, dude. I actually love what you've done to continue to sort of drive the innovative drum on the next belt sort of theme, because I do think that the second tier or third tier cities, the Buffaloes, the Pittsburghs, the Clevelands, the Detroits, who were so impacted by just the lack of innovation coming out of the 60s and 70s, I think are ripe for just new, young, innovative energy. So I love what you're doing there. But no, this is Real Fridays, man. This is Real Fridays. I'm so excited. This is something I look forward to every Friday at 12:30. Julie, this is where we talk about industry information, innovation, trends, market trends, headlines. And Julie is our special guest for this week from Newrez. Congratulations on your transition over to Newrez. You've been there for what, about 6 months, 8 months?
4 months. Pretty new.
4 months?
Yeah. During end of October.
And where are you based out of? What city?
New York. So the company,
okay.
Yeah, we have a presence. It's been a series of interesting kind of like how the companies come together, but we're in Philly. I'm in the New York office. I sit in the Rhythm Capital office. We're co-located, Rhythm and Newrez. And then we've got Greenville and Dallas and Houston and Tempe.
That's fantastic. So what we do is we kind of tackle headlines, and then I'd love to learn a lot more about what your strategic plans are for Newrez. Newrez is a huge company. I mean, it's I didn't look at the recent numbers, but I want to say, is it top 20 in total origination volume? Wouldn't it be in the top 20 or close thereabouts?
We're the number 5 non-bank originator, and then number 4 non-bank servicer.
Number 4 non-bank servicer, number 5 non-bank originator.
Yeah.
And so that would definitely make you top 12, probably top 13, 14 then when you add in, the four or so depository originators in there too. That's amazing. So let's talk about headlines and we can transition over to Julie. What's been most notable this week, both in what you guys have been working on, Julie included, in the work this week that you've been doing in your respective sort of domains, or just what you've read in HousingWire and the other publications?
Seems like we're finally getting some existing home sale data improving. That's kind of our core metric, because we're helping first-time home buyers and some downstream home buyers and home sellers, and we don't really compete with builders at all. So that's like kind of our biggest market data is existing home sales, and that actually has gone up considerably in the last month and got adjusted a little bit better. I think it went up like around 3-4% month over month. So that's the big metric that we watch. Rates have obviously gone back over 7, up and down around 7. So that's a little bit painful and not the drop we were looking for. But you guys all follow the rate stuff probably closer than I do.
Do you think that's related? Do you think it was like, hey, the rate going up told home owners, all right, I might as well sell because now I'm not waiting for anything at this point?
Well, that's what I've been saying. That's like what I've been saying. We just need like some stability in rates, and then people will just get back to normal,
Yeah. I don't know if they're as much related as much as it is just the seasonality of the business, because we're entering, we're exiting the lower points of the, that November, December, January, February time periods. And now we're turning the corner into March. Usually March, the pipelines start to swell. In April, I don't think we're seeing that as much of in effect right now, just because of the rate environment. I do think we're going to see listings for sure go up, because I mean, if you're a 60, 90-day list, or a 60-day list, in some markets, you list now, you'll sell end of March, mid-April, maybe end of April. You're starting to really get into that time period where properties start to move.
Yeah. And it's been kind of a slow burn. So I feel like this was a surprising number I read, but from the peak of, I guess the peak was probably like about a year ago. The existing home sale prices have gone down about 8% from the peak average home price or median home price. So I do wonder whether people are going to start getting antsy, worrying about recession or price drops and that kind of thing, and get a little antsier to actually list now.
What about you, Jeremy? What happened this week for you?
I think the thing that I spent most of the week thinking about was existing homeowners and first-time home buyers relative to equity, home equity in particular. There was an article in Fast Company that was basically like the starter home is either dead or dying, or the starter home is gone, and so therefore the American dream is gone, or something along those lines. And I had started this, I have those Jeremy Potter theories that come out from time to time, and I was starting one around this idea that the starter home isn't a whole home anymore, that the starter home is now the amount of equity you want to buy into. So if $280,000 is what we want a starter home to be for your average American, let's say, why don't you just get $280,000 of an equity ceiling and start buying into that? And so actually the house might be more than that, or the community you buy into might be more than that, but you're buying in at a starter home monthly payment or a starter home equity arrangement. And maybe that's one of the things that kickstarts this fractional shared equity, shared appreciation market that we see some activity happening around. Maybe what kickstarts it is we tell policymakers and politicians the new starter home is just equity. It isn't a home at all. It's just a piece. And as long as you have some of that piece and you're working on it, like that's your new starter home. I don't know if that resonates with consumers. I don't know if it resonates with investors, but that was kind of my thought on how we deal with the fact that there isn't any more starter homes listed.
I actually love that. And I wish that would take root more institutionally in the business, because I think that's why you get into home ownership is because of the equity, right? The whole value proposition, the whole ROI analysis isn't about the white picket fence, and it isn't about the home.
Well, anybody who owns a home will tell you home ownership's miserable. The actual experience of owning a home is miserable.
Yeah.
So it has to be about emotions, and it has to be about equity, because it is not about fixing your dripping faucet at 3 o'clock in the morning.
Yeah. No, well, exactly. I mean, equity drives the decision, the longer term investment in it, and just the overall stability of the experience, right?
Julie spent some good time thinking about the alt product space the last 5 years or so. You seen any good stuff recently, Julie?
About 5 years, yeah. And Jeremy and I were talking about shared equity in down payment. So as a form of down payment assistance, looking at kind of what they're doing in California, rolling that out across the country. I think there's some super exciting applications there around making homeownership more accessible. Something that I think about a lot. And then on the alt side, something that Brock knows is a kind of like just thing that noodles around my head all the time is locked equity and kind of like reverse alternatives for senior population. I think you look at the amount of equity that's out there, the demographic trends that we have of people getting older, having that home equity, and figure out ways to help that or I guess to help people age in place, which is really what people want to do. So outside of taking my Newrez hat off, that's something that I think about all the time.
Tell us a little bit more about how did you come about this opportunity with Newrez? How did you cultivate the relationship and then synergize the role with what they're looking for?
Yeah, absolutely. So I'd gotten a chance to know Barron a little bit. Barron Silverstein is president over at Newrez and my boss. I got the chance to know Barron a little bit in my former role at Easy Knock, just kind of through the industry and my kind of mortgage circuit. And one of the things that really attracted me to the opportunity, and you really said it yourself early as we started the call, we've built the Newrez team, right? We've built this awesome company that in many ways has really flown under the radar. And one of the things that I love best in the work that I've done is really around that market positioning, telling that story of who we are as a company. I think there's so much exciting stuff that we're doing at Newrez, so much, scale that we've accumulated, right? Just looking at how the portfolio has grown over the last 5 years, right? Has been insane growth. And in some ways, really, because of the Rhythm relationship, we've kind of flown under the radar. And so that part's been very exciting for me, getting to work with an awesome, really tenured leadership team, but getting to, think about how we're positioning the company in the market.
I love it. Can you explain, just for us as well as anyone who's watching, like just the breakdown of Newrez between what the channels of business are? And because I'm assuming the bulk of the servicing portfolio is bought, right? Just from a correspondent standpoint. But do you have a breakdown of that?
So if you think back to the kind of history of Newrez, right? Rhythm, which used to be NRZ, started really bulk MSR purchases, and then down the road, started to buy an operating company. So Shellpoint Partners, really long tenured, respected special servicer, so Shellpoint Mortgage Servicing, I should say. Shellpoint Partners being the parent company with a few different subsidiaries, but SMS being the largest. And then through the acquisition of DieTech, through the acquisition of what else are we forgetting? New Pen. Yep, New Pen and Caliber. Then 2 years ago, formed this, and we're just closing on the acquisition of SLS. So that will take our portfolio to roughly about 700 billion UPB. Once all the SLS loans are boarded. So that's not closed yet. That's closing, in the very near future. And so we're a huge servicer that really has had a pedigree in special servicing, right? And does owned servicing for the entire Rhythm portfolio of MSRs. The SLS acquisition, where that gets us into, is third-party subservicing. So that's a servicing business. And then on the origination side, we're unique. If you think about peers and from the servicing side of like a Penny or Cooper, we're unique in that we've got every origination channel. So we've got distributed retail, we've got a joint venture business, we've got wholesale, correspondent, and D2C. Yeah,
that's great. No, I remember. Julie, go ahead.
No, it's all right. You have a question? You have a follow-up? Go ahead.
No. Go ahead, Jeremy.
One of the things that we think a lot about, we end up talking a lot about it on here, but I think about it a lot too, is like who the customer is. And with what you just described, you've got incredible scale and visibility into what's happening. What are the trends in a particular area? What are the trends in home ownership? What are the trends in, you were saying, home equity? But the customer is like the investor, right? The shareholder or whoever, for all of us in some ways, Fannie and Freddie in particular. But can you talk a little bit about how to think about when your customer isn't necessarily the homeowner, but we're all in this to make that experience better, how you think about that dichotomy, and just like, what are some of the things you bring to that thought process, and how would you suggest somebody like us think about it going forward? What's possible or what you see as trends?
I'm going to try to answer that question the right way. If I think I understand what your question was. But ultimately, I think that, we've got a lot of different customers, to your point, right? There's, you've got the investor customer, you've got the actual homeowner. I think one of the things that we're super focused on is we've got, we've had 4.6 million customers that have come through our doors, right? That number is going to continue to tick up. About 2.8 million in the portfolio today. And so that opportunity to serve these homeowners and to bring them things, way more beyond it, beyond, that journey really just starting at the close of their mortgage. And then having, creating a sticky servicer, that's something that people really want to be part of, right? That they find benefits in. So looking at trying to find different ways to create value for those homeowners at the end of the day. Did I answer your question?
Do you think, oh, for sure. I mean, I think one of the things that has plagued the industry for a long time has just been, I only have to be good enough when it comes to the homeowner. Like, if you just think about it rationally, an economic actor goes, they're captive anyhow. So I just have to be good enough, versus what you said, which is like, how do we really think about both adding to that population because we're good at it, and then two, making it so that they actually choose us if given the choice. And could you ever see that, like, servicing, for instance, becomes a reason to come back to the origination platform? So would I have such a good experience, I'd be like, hey, look, I've been transferred before, I don't want to be transferred again, and I like what I've got. And so keep me in the portfolio. It's not something we see a lot of yet, but I think it is possible. And I think what you're suggesting is totally you're on the way there, but I'm curious.
Yeah. No, and that's what I think the opportunity is, right? It all goes down to lifetime value, which I think is something that, like, coming from like kind of the fintech / software world before this, right? You think about customer LTV, lifetime value, not loan to value, but lifetime value.
Yeah.
Think about that metric all the time. And it's something that, you know, if you want to just serve as a loan until it pays, then fine, that's one income stream, but you're leaving so much on the table, right? There's both making money, but also like there's an opportunity to create a really great experience with someone, meeting them where they are, right? You have access to their home. You have this relationship that can last for 30 years, right? You don't have that in I know most of the apps on my phone. I don't you know, I haven't really been around. I haven't had a phone for 30 years, but you know, you know, thing, right? You don't need not a lot of there's not a lot of consumer interactions like that where you really have that opportunity for a long lifetime, and then to continue that.
Mm-hmm.
So if we back up a little bit, I'm sure we'll come back to more Newrez topics, but Julie has a really cool, I was lucky enough to work with Julie for a couple of years. She was actually my boss at one point. That was fun. Julie has a really interesting path into mortgage, and like some really crazy jobs early in her career that kind of led here. So can you give us a little background on how you got to mortgage and real estate?
Yeah, I think it's all connected when I think about it. Like I studied, I went to the school at NYU where you designed your own major, and I focused a lot on infrastructure, and I found real estate entirely uninteresting. But then I also found, you know, buildings and cities and how people interact. And then the home is really at the center of that, right? And so that's kind of how I ended up where I ended up. So worked in politics a bunch. Then I started my career at Goldman. And then I've been in prop tech since like the early prop tech days. You know, we used to go to these conferences and there'd be like the same 50 people in the room. It was always in New York, and that was really it. Like there were like 5 companies. It's like VTS, company I used to work at, CapSec. I was actually just talking to the CEO there. Commercial releasing data, so totally unrelated to mortgage, but did that. I launched all new markets for them. So that was really about collecting commercial real estate data. Did that all across the US, and then I was over in London for a while. And then I was at WeWork after that. Did WeWork, you know, I was started in New York, but then I was over in Asia for a few years. I spent a year in Shanghai, a year in India, and then came back and joined a company called EasyKnock, where Brock and I worked together, doing sale leasebacks, really providing alternative access to equity. And then ended up here at Newrez. So I think what I like to think I bring to the table is this, you know, I've got this perspective of working with these different kind of more cutting edge tech companies and kind of alternatives, and in different, you know, thinking about these newer prop tech businesses, have brought a lot of those in the door, I think. You know, we're actually just launching a realtor network over the next week. And that's going to be courtesy of our partnership with NewZip. So super excited about that. Getting that going. That's going to be great.
Official announcement right now. Nice.
Yeah, there you go.
REALFridays.
Yeah, there you go. You guys got the exclusive. Go for it.
I was just going to say, when is that going to be announced other than just a minute ago?
Next week.
Yeah, next week.
Oh, perfect.
Still waiting on that cross-country mortgage announcement. Weird.
Yeah, it's weird.
Anytime you want to launch that partnership
announcement today, and it weirdly enough didn't have anything to do with any of our companies, Jeremy. But yeah, so working at EasyKnock, I think was interesting. Seeing that kind of like boom and to some extent bust of like the alt products. So it's like nice. CCM today, tying it together, announced a launch of a fairly similar product, alt product. I don't know how you guys are doing it, right? Whether it's in-house or whatever, but or partnering with a company like EasyKnock or someone similar. But it's interesting to see how it's all changed as the rate environment's changed and the market's changed. But either way,
what's funny is we were tied up with Ribbon, but CrossCountry really didn't do very many Ribbon deals. And this is, I think, an anticipated sort of sign to come, because I'm seeing a number of opportunities percolate more in the conversation around getting the cash offer more readily available to the consumer. I'm just, you know, you're hearing that conversation get louder and louder in the marketplace. There's a number of different vendors out there now, EasyKnock being one of them after having acquiring Ribbon. But there's a number of these organizations that have now sort of perked up to, I think, just in time prior to the spring and summer buying season. So I think there's a number of look, I think we're all hopeful, right, for a more aggressive spring and summer rebound from where we've been in 2023. I don't necessarily know if it's going to happen the way that we all hope it's going to happen. But certainly I think the sign of these all cash deals, especially with what Cross Country just brought to market, is an indicator of trying to prepare for just to make consumers as competitive as possible in every scenario, you know?
Yeah.
Yeah, I think I was talking to somebody this morning and kind of said, I think some of the all-in-one platforms, I'm thinking of like Open Door, Orchard, stuff like that. I actually think they're going to be, in hindsight, proven to be right, but early. And one of the things I've carried with me for a long time is like, you being first and being wrong feel the same in the moment. Meaning, it's hard to tell. Am I just first or am I wrong? And I think what we'll end up seeing is that it does this kind of toolkit that buyers need and this toolkit that homeowners need is expanding. It's going to continue expanding. It's just a question of like when the market meets the opportunity, and some of these early players might just have been like, hey, you just timed it wrong, unfortunately.
When you say this is true, most early players die. Right, I mean, most early players struggle. I mean, they
interesting.
Everyone talks about the first mover advantage, but like I saw some data a while ago, not specific to our industry
at all. I don't think that's true at all.
The second mover advantage is like a term I've heard startup people coining over the last few years. Yeah.
Because the first mover tends to burn so much cash trying to convince everyone that the idea or the product is the right product in the right market. You're trying to sort of massage the marketplace. And then after it starts showing some promising signs, the investors get super wary and they get really upset, that they're not making the traction that they had hoped. Because traction at year 4, year 5 is a little different than traction at year 1, 2, and 3. I mean, you're a lot more financially road weary, Go ahead. You were going to say something, Jeremy.
No, I just think that's a really interesting way to frame it up, because I think it depends on how big the change is. So I think if you define the category, then it is worth being the first mover. If it's big enough and you define it, that's the one exception. So Google as a search engine, I think, is a good example versus, and maybe to some degree, Rocket
a good example of what?
They defined search engine. So
I know, but they were like the 4th iteration. I mean, you know what I mean? They weren't.
You're saying Netscape. In this case, you're saying Netscape is the one.
Yeah, Google wasn't the first mover.
No.
Yeah.
No,
search engine or browser?
Yeah, they were like the 3rd or 4th
browser?
engine. Yeah.
Yahoo.
No, not browser. We're talking about search engine. Yeah, I mean, there was that Panda Bear one, and then there was Yahoo, and then there was Netscape.
Ask Jeeves. Yeah, that was a good one.
I love Ask Jeeves.
Ask Jeeves and Yahoo predated the Google search engine.
Yeah, Google was a late entrance in it. They were like 98 or 98, 99 or something like that.
So we don't have a first mover category king that we would say was worth it.
Look at VR. I mean, Facebook has spent billions on VR, and then Apple, I think, learned so much from their fault lines. They kind of watched them for 3 years, watched Mark burn a bunch of cash. I wonder, and you look at mortgage isn't all that much different, right? I mean, Optimal Blue came out in the mid 2000s, early 2000s, but they were probably the 3rd or 4th pricing engine that had hit the market. So I think part of it's usually first movers are early, right? I mean, a good example is Ribbon. Look at Ribbon. Ribbon was a phenomenal first mover market advantage, and then they blew up, and then and it's given rise to probably half a dozen new cash offer platforms.
Yeah.
That now will probably be more prudent in the way that they go about the business. It'll be really interesting to see. I'm trying to think of other.
But hold on a second, because you're now making a case, and Julie, I'll throw it to you. We're now making a case that like doing it right, even if you're 2nd, 3rd, or 4th, is the way to go. But that doesn't sound like the mortgage industry to me. Like nobody's like investing in the way that we just described to like overdo their differentiators. I mean, maybe I'm wrong and I'm being a little hard on Rocket or whoever right now, but like, I don't know. If what you just said is true, then doubling down on quality and doubling down on being the best in class, even if you're second, third, or fourth, is the move. But we're not seeing that, are we?
And there's a ton you can learn from your peers, right? I don't think anyone should get stuck just in life in general, right? You know, you could get trapped just looking around you all the time and not move at all, right? But to your point about kind of first movers and watching people blow up and all that, I mean, it's a remarkably economical way for you to learn when it's not your company and your money.
That's right.
Right?
Yeah.
And so I think one of the benefits of mortgage being a relatively fragmented industry is that you can learn a lot, right? At different scales, right? You can learn, you can from, I read things that about, small regional lenders that I learn a ton from, right? And then you look at, these huge national servicers as well, or copy your peers. Well, that's not really a winning strategy, right? It's authenticity, running your own game, but there's a ton you can learn, right? Inspiration comes from all places. So
yeah. Thanks for the comments, by the way. We got some good ones from Mike there. I don't know if he's having a bad day, but some
I actually think Mike. I don't give Mike public props too often, but I will say I did admire him when he was driving easy mortgage apps. I really watched his adoption, and I really liked the innovation that he was doing at Easy Mortgage Apps. I think he made an interesting sort of comment there, because I think he was earlier to market, than Simple Nexus and some of these other front end sort of platforms. But it often just comes down to, I don't know. I mean, a combination of timing, additional leadership, capital, partnerships that you can establish to kind of bring it to market in a more visible way. But I really appreciate it. I mean, I liked what Mike did with that, and there was a part of me that was a little bit sad when Easy Mortgage Apps kind of went to the wayside. I don't know if it shut down or was acquired or what have you, but I really give Mike a lot of kudos for being an evangelist in that way to for that product.
Yeah, thanks, Mike. But yeah, I think the part of the question there for Julie was like from Jeremy, where you're kind of asking like, what would it take for a mortgage company to decide to be a first mover on something? Like a lot, it seems like, in a lot of cases.
Well, and the thing is, you get companies like Newrez or Guild or Cross Country or what have you. I mean, it's a question of our positions tend to be so market dominant that there's either the stable ship that's steady Eddie that kind of continues on what we're doing, or there tends to be sort of, like if there's any organizations that could be market movers, it could be us, right? But we tend to not be the market movers in any really substantive way, because we become sort of champions and experts at the business as it's done today, not so much as the business, like we're king of the hill of the way the market looks today, not as much of where the market was going to move tomorrow,
And my point is, or was, and continues to be, that's because the incentives are not aligned to build something tremendously special and delightful, to use the product development word, for consumers. Consumers, your incentives, I think, at Cross Country are to wow the loan officer with opportunities, tools, pricing, whatever, because the loan officer is the customer, so to speak, in this context. And I think that's why I was asking the question about investors and shareholders versus team members versus consumers. I don't think this industry does a very good job of designing things with the homeowner in mind or designing things with the consumer in mind. I think this industry does a really good job of designing things with the loan officer in mind, or designing things with the loan officer to give to the realtor, right? Doing. And so like, what would happen if, my question, if you're not the first mover in consumer experience, but you want to redefine consumer experience, what would happen? Who would want to do that? But there's no incentive to do it, because you just have to be good enough to get the referrals in, to get the leads in, and then churn them. So as I see the incentive landscape. And I could be wrong. I love being proved wrong. That's how I learn. But that's my overall kind of take.
Look, I think that's one part of. I think that's definitely one part of it, right? Yeah, I mean, you got to play today's game as well. But like, I think what I was saying earlier about kind of building that servicing experience, making it a really, I'll use your word, delightful, right? That's a lot of the partnerships that we're looking at, and the stuff that we're building and investing in is really thinking about how do we make that homeowner want to buy their next home with us, right? And up that lifetime value and really be delighted, to use it again, with that experience. So
Julie, so you drive such a massive ship, right? From really different segments of the business, the origination side, the servicing side, so I don't know, like, is the focus to monetize or to establish, like, what's the focus in the partnerships that you're developing? Is it to serve and support the consumers you're touching every single month, or is it on the origination side? I mean, where's your focus?
I think one of the opportunities that I'm most excited about is this, nearly, let's call it 3 million round up customers, right? What can we bring in that's more than just, and we do a lot for them that's not just paying your mortgage every month. So I want to make that super clear. But how do you make that something that relationship drives value to them in way more than just, getting them into that house day one? How do we improve their homeownership experience? How do we, set them up for, future products that they may want, whether that's a mortgage product.
So let me slow you down for a second. How are you improving their homeownership experience?
So things that we're looking at is how do you make that more rewarding, right? And so we've got a couple of things up our sleeves, but really, how do we deliver, digital tools that help them realize and understand their home equity position and what that could mean for them? How do you, kind of give them that knowledge, help them to view other properties, get more connected to the community, right? So we do a lot with kind of community outreach as well. And I think that there's a lot that we're working on kind of other services and values that we can deliver to them beyond just the mortgage. I'm gonna be a little vague, sorry.
No, I mean, I think one of the
more
things.
Specific? Is there any areas you could be more specific or no?
They launched the real estate concierge this week that when someone's ready to buy the next house or sell that house, they can save a bunch of money on the real estate side.
So getting consumers up to 1%, right? In cash rewards on close.
Yeah, they can save up to 1.5% on both transactions. Yeah.
Oh, that's huge.
Yeah. So that we're really excited about. That's real cash rewards, and that's something that we're doing for them, right? And so we're excited about that. Delivering value like that. And we've got a couple of other ways that we're looking at, giving them perks. We have an offering of a bunch of different perks that we offer, and looking to up that as well. So anything related to the home, kind of and beyond.
I love it.
Yeah.
Yeah, Rick, you've worked on a number of different kind of ancillary transaction partnerships for CCM and previously for other companies, right? With like insurance products, credit improvement products, like stuff like that. What are you seeing any kind of new ones that you're excited about for CCM or in general?
I love how you turn the tables on me. Fair. That's a really fair question. Got it. Yeah. I always say, Julie, that I genuinely believe exactly what you're doing is the right move in the industry, and I think Jim and I've talked about this a fair amount, where the only way to move beyond the transaction is to actually tap into the consumer experience. But beyond just like, we're going to monitor your credit, and we're going to, if you get into a jam, we can figure out a way to delay your payment or to push it to the back end of the payment cycle. Beyond the actual restructuring of the loan, like actual partnerships could be with national grocery firms. It could be with Home Depot or different sort of manufacturers that as you look to mow your lawn or paint your house or do anything that would make the home ownership experience more comfortable, smarter, more efficient, like there's natural partnerships that could go into assisting the consumer in doing that, even to the point of, I mean, in a perfect world, you'd have an invisible force field of sorts that's around that home, and the consumer's just sitting there watching TV or what have you, and all of a sudden you get a notification from the Newrez app that says, "Hey, there's something wrong with your furnace. You know, we've been monitoring this. It's not firing up correctly, or whatever the case may be, or it's not burning as efficiently. We're going to go ahead and order out through a partnership a maintenance guy that's going to come, or gal, whatever, that's going to come to fix it, to check it out, to do some preventative maintenance to it. Don't worry about it. We got your card on file. We'll charge it $60, or it's a part of the home warranty. And there's someone's going to come out there just to, and you know, what date is good for you? And without leaving my recliner, I can just click a button and say, next Thursday, I'm home at 11 a.m. Have someone come and show up, and it's done, right? The worst feeling for a consumer is they wake up at 2 a.m. and your furnace is off, and it's February and it's 20 below zero, or it's July and you're in Atlanta and it's 110 outside or whatever, and your AC, your HVAC system goes out, right? So, or your refrigerator goes out, or anything, right? So someone should be watching that stuff above and beyond the consumer having to react to it when it fails, right?
Yeah.
And I do think that people, like organizations like CCM or Newrez, are in a really unique position to actually deliver on that experience that, you know, 3,800 mortgage companies out there just don't have the scale, the money, the vision, the leadership to actually make that happen.
Yeah, I remember it was one of my first days or weeks working at Rocket, first job in the industry. I was amazed at they were making so much money at that time. Jeremy, you'll remember selling bolting on home security systems with the mortgages. It was insane how much ancillary revenue was coming from that. Like one of the first times I looked at the models there, and that, you know, it was impossible to get that out of my head after that, with all the other things you can do with, you know, whether it's moving companies, we help with moving, we help some with title, we help with a handful of things at NewZip. But I think on the lender side, there's even more opportunity, and on the servicing side, there's probably the most opportunity. So both of you guys are in good seats there.
Yeah, I think the word concierge gets overused and gets a bit tired, but I think that kind of full spectrum service and really, you know, everything along that homeownership journey, that's where the ball is for us, I think.
Mm-hmm.
Yeah.
Nice.
I love that. Jeremy, what's up? You were about to say something, and then I get distracted. I get distracted by Michael's
coming. Yeah.
I think consumers have proven that when they see value and feel value, they'll go to where the value is. I think one of the reasons that so many servicers have struggled with how come nobody comes back to my site, back to my app, how come I have limited engagement, is because there's no reason to go back other than setting up your auto pay or changing your auto pay. And then, you know, one of the biggest criticisms of why these ideas don't get more traction within organizations is, you know, stick to what we're good at, or would consumers really do X, Y, Z? And I think we do a bad job of looking at other consumer apps and saying, like, I'll use myself as an example. I know that Google's reading my email, but you know what I really like? Free Gmail. So I don't care, because I don't want them taking another $1, another $5, another $9 a month. So of course they're mining it to sell me stuff. I'm okay with that, because I want everybody to find me no matter where I am in the world. They know my Gmail address and it's free to me. So, like, to me, a lot of people in our industry get hung up on who will or won't use it, and is it too intrusive, instead of asking the key question: what's the most valuable thing I could do for a homeowner today? Like, that's a product question, and we don't ask it very often, or we don't ask it enough. And keeping the home safe with a home security system, pretty valuable to people, turns out, to Brock's point. And I think, like, to Julie's point, knowing how much my home is worth shouldn't be that complicated of a question at any given time. Yet we've made it this super mysterious thing. The one thing our homeowners care about is, what's my home worth right now? We can't answer that question. Like, that kind of stuff is like, if I was working in a product role in one of these organizations, the thing I would be asking is, like, how do we write the question for the most valuable thing we could deliver today? And that's the thing people want to know. Great. How are we going to deliver it? Might not be perfect at first, but like, let's get them what they want and let's go from there. And I think that's what I mean when I say, why aren't we thinking about this from more of a, first principles perspective? Anyway, that's why you saw that look on my face.
Are you finding the environment at Newrez as being one that's been very receptive to expanding its view beyond the traditional roles as originator/servicer?
Absolutely. 100%. We have a couple of different, I'd say, more traditional ancillary revenue sources, but I think in terms of the things that we're exploring that are on the product roadmap around that full spectrum homeownership journey, and I also have the privilege of sitting with our digital and tech team, who are creating some awesome stuff. It's been really cool to see, us, I think everyone's really thinking a lot about AI and how that practically integrates into the business. That's something that we're really excited about. We're launching a few different really exciting modules there. And I would say that, we've got some kind of really long tenured history in both originations and servicing, have, continue to win a lot of awards for our, especially our servicing operational excellence. But I think that, if I think of our servicing leadership, we're always thinking about how do we deliver greater value, right? What are the ways beyond just delivering a great operational experience, to really, go back to Jeremy's delightful word, create a more delightful homeownership journey with us.
What I love, Julie, is that, I love your background. I'm glad Brock asked that question about, where you've come from and in that preceded sort of Easy Knock. Yeah. And I think the testament to, or a reflection of how open they are to seeing themselves beyond simply an originator servicer is by hiring you for the role that they hired you for, because otherwise I don't think they would have if they didn't see it that way. I think that's great. And you couldn't be in a better position to have a real impact on those that are serviced by Newrez versus being serviced by somebody else.
I'm super grateful, to be in the role that I'm in and learning a ton from my peers. And I think we've got a lot of great stuff ahead. So I'm really excited about the year. I know that's funny to say midway through Feb, but I'm excited about kind of, coming months and the rest of the years ahead. There's a lot of great work to do. Yeah,
Q4 earnings is just coming out. It's fine. Yeah, it's still year end. Yeah,
made it through my first earnings here, which was an incredibly relaxing experience. Anyone who's been through earnings, it always is. Yeah.
Cool. Well, that's great. We about to wrap up here. Jeremy, any final shout outs for Detroit as the heart of the next belt that you want to get out, since Rick disparaged you at the beginning?
It's all happening here. We're building houses here. I was at the opening of a 3D printed home last night that's on the market.
I love that.
Sweet.
We're bringing 9 factory built houses to the city. So if you have thoughts on innovation in housing and housing technology, I think you need to be in Detroit.
Was that video that you sent out, Jeremy, about Amazon shipping that container box that basically created this 800 square foot or so tiny home that kind of folded out? Was that real? Because
yeah,
that was fascinating. Was it for 20 grand?
It's like a transformer, right? It's like just a container that folds into a house.
Unbox a accessory dwelling unit, unbox a home office, unbox tiny home. And they bought it on Amazon for $20,000. And you could kind of open it, and it's rectangular, and then it kind of folds out the way you could imagine like an RV expanding to a degree, except with actual drywall, except with actual windows, except with actual clicking into place seams. Do I think the $20,000 unfoldable house is a permanent solution for owner-occupied home ownership? I do not, but I love it for making us think differently about getting there. And I really do. I was at the Henry Ford Museum in Dearborn this week with my daughter, and Buckminster Fuller's house is on display there. And he used aircraft pieces from World War II to design a house in today's dollars would be a $91,000 home. And it's 1,100 square feet, and it has 2 bedrooms. And I'm not saying that we're going to be building houses out of extra pieces of other things in 2025. But I do think that this idea that we can design and execute a better real option for first-time home buyers,
Oh, I love it.
urban infill, subdivisions, remote work housing. I do
Oh, I
believe
love it.
that is possible, and I don't believe it has to cost $350,000. So,
Look,
yes, I sent you
can
that
throw
video.
that.
I sent
You
you that
can
video.
throw one of those.
Cool.
Link that video
You
here,
can-
Jeremy, afterwards. That was cool.
Yeah.
Yeah.
We'll throw that video up. We should throw that video up in the chat. After the call here. But you throw that up on a permanent foundation. I mean, you could easily get financing for something to that effect as long as it's a new construction, situation. I don't know how you qualified the.
I wasn't
the
saying, yeah. I
contractor,
wasn't
but-
saying not to
And
try it. I
actually
wasn't saying not to try it. $20,000, it's worth a try.
Yeah.
Good.
Cool. Good shout out.
Well, thank you guys. Julie, thanks again, and good luck. This is great. I look forward to keeping in touch with you.
All right. Happy
So good
Friday,
to see you,
y'all.
Julie.
Thanks for
All right.
taking
Happy
on.
Friday.
Bye.
See you
Take
later.
care.
Bye.